Square buys Afterpay. Stock up, Jack Dorsey. Hi guys, we're back again. Welcome to Stacking Stocks and many thanks for joining us today. We hope you're super excited about our new and interesting content. We endeavor to bring you more usable and up-to-date information than anyone else. Sit tight and hold your horses. We're here for you. And I guess you're already probably wondering what we have in store for you today. But before we get into today's content, let's have a quick recap. In our previous session, we talked about Amazon accepting cryptocurrency as a means of payment. Wow. There's always so much to talk about when it comes to cryptocurrency. First, it was Tesla. Now it's Amazon. What next? Maybe the whole world will soon accept cryptocurrency. Anyway, our primary focus today is Square buying Afterpay. Stock up? We have a lot to talk about concerning Afterpay's merger with Square. And here we go. August 1st, 2021 was a big day in fintech, the headlines being Afterpay has agreed to merge with Square. The $29 billion all-stock deal rocked the fintech world. Jack Dorsey, Square co-founder and CEO, said in a statement that he believes the two giant fintech organizations have a shared purpose. He said, "We built our business to make the financial system more fair, accessible, and inclusive. And Afterpay has built a trusted brand aligned with those principles. Together, we can better connect our Cash App and seller ecosystems to deliver even more compelling products and services for merchants and consumers, putting the power back in their hands." The merger agreement means that the two biggest financial technology behemoths in modern-day history will now become one. Wow. Afterpay and Square are two of the most admired and decorated companies in the financial technology industry and are currently on a path to become one. Can you imagine that? I bet their competition is now trying to look for strategies to keep up. Afterpay and Square could build the most crucial payment networks in the world if all goes well. Who would have thought that this would ever happen? Square has already built a significant merchant payment network, Cash App, and it's a high-growing and thriving consumer payment service. Imagine the wave the two fintech companies will create with a single integrated payment network. Historically, merchant payment networks and consumer payment services have never been integrated. They've always been two separate lines of business. However, Afterpay and Square seek to join these services and bring you a single integrated experience. Now, what's the impact of this merger? You probably imagine the profits in billions that the two giant companies will make, and you're right. Afterpay and Cash App already boast of having double-digit millions of consumers. In an article posted by TechCrunch on August 2nd, 2021, Mary Ann Acevedo quotes that Afterpay had served consumers in excess of 16 million and approximately 100,000 merchants worldwide as of June 30th, 2021. The numbers are huge! And that's not all. The numbers include major retailers across diverse industries such as beauty, fashion, homewares, and sporting goods. On the other hand, Square's seller ecosystem records double-digit billions of payments every year. That explains why the fintech world is just taken aback by this merger. The individual numbers are already crazy. Imagine what the two fintech companies will do together. If they don't take over the entire financial technology industry, I don't know who will. The companies highlighted in a statement that the addition of Afterpay will accelerate Square's strategic priorities for its seller and Cash App ecosystems. Square plans to integrate Afterpay into its existing seller and Cash App business units so that even the smallest of merchants can offer buy now, pay later at checkout. The integration will also give Afterpay consumers the ability to manage their installment payments directly in Cash App. Cash App customers will be able to find merchants and buy now, pay later offers directly with the app. Square and Afterpay will surely be able to tell a more complete story of next-generation economic empowerment. As a consumer, we understand that you're probably wondering how we got to this merger and what the merger means for the future of consumer finance and the payments industry. Afterpay's only institutional venture investor, Dana Stalder, has some perspective to share on this merger. Critical innovations in fintech. Now, Dana Stalder states that every 5 to 10 years, the global payments industry undergoes a critical innovation cycle that determines the winners and the losers for the next several decades. The last major transition was the shift to NFC-based mobile payments in 2015. The major mobile OS vendors, who are Apple and Google, cemented their position in the global payments stack by deftly bridging the needs of the networks, Visa, MasterCard, etc., and also consumers by way of the mobile devices in their pocket. Afterpay sparked the latest critical innovation cycle. According to Dana's perspective, we notice that Afterpay is the latest giant in the critical innovation cycle. Now, how did this fintech company rise through the ranks, and who are the brains behind its success? Here's a vital insight that they discovered. Millennials detest credit. And Nick Molnar and Anthony Eisen came up with the consumer payment service for millennials. The global mortgage crisis of 2008 played a significant role in the millennials' choice of payment service, a strong preference for debit cards over credit cards. Imagine being forced to watch at a young age as your family and friends lose their homes because of mortgage debts. This bolstered their already low trust for banks. How then did Nick Molnar and Anthony Eisen capitalize on the millennials' lower trust for banks? Well, they ultimately built one of the fastest growing payment startups in history on their core product: buy now, pay later, and never any interest. In simple terms, here's an explanation of how Afterpay works. If you have $100 in your cart and choose to pay with Afterpay, it will charge your bank card, typically a debit card, $25 every 2 weeks in 4 installments. No interest, no revolving debt, and no fees with on-time payments. What does this mean for millennial customers? It means that they can get the principal benefit of a credit card, the ability to pay later, with their debit card without worrying about all the bad things that come with credit cards, such as high interest rates and revolving debt. Would you resist an all upside and no downside offer? For merchants, it means they get a fair trade as they rely on millennials as their primary growth segment. Merchants would have to pay a small fee above payment processing to Afterpay, but they get significantly higher average order values and conversions to purchase. We don't see why anyone would resist a win-win proposition like this. Square plus Afterpay, are they the perfect fit? Do you think this merger is a perfect fit? Dana Stalder has so much to say about this merger. He states that I've been building payment companies for over 15 years now, initially in the early days of PayPal and more recently as a venture investor at Matrix Partners. I've never seen a combination that has such potential to deliver extraordinary value to consumers and merchants, even more so than eBay plus PayPal. If Dana Stalder thinks that the merger has so much potential, much more than eBay plus PayPal, why would anyone think otherwise? He's an admired and decorated venture investor. We should thus take his opinion seriously. We've seen the numbers of the individual companies. There are double-digit billions that will most likely rock the fintech industry. What can we do? Just sit back and watch this space. Afterpay plus Square will take over the fintech industry. As always, we'll keep you informed. You can always follow the debate on Square plus Afterpay right here, real close. Thanks again for tuning in today. Don't forget to like, subscribe, and share.